This is Stats Trader. My name is Pasha. Welcome back to my YouTube channel. Now in this video, I'm gonna tell you about my new pattern that I've just recently started tracking just last week. Now when I say tracking, if you guys don't know what that means, I track all my strategies in Excel, and here you can see the link to my stats tracking video. If you haven't seen it, please go and watch it. Now, recently we've seen a lot of runners like GME, like AMC. These tickers went up more than 1,000%, and they provided us with some great opportunities for short. Now, when you say you go short, you bet on a stock to go down instead of just buying and holding a stock. So first of all, I just started tracking this strategy. It's pretty simple, and it gives you really good results if you do everything right. Now, first of all, you need to focus on stocks that went up 1,000+%. That's the first criteria. To find these kind of stocks, you just basically scan in your scanner for stocks that went up 1,000 or more percent. Now, second, there should be a big drop after this run up. What that means is, let's say a stock went from 1 to 10 in, let's say, 3 days, and you're waiting for this, what's called the first red day, where you had a massive panic, 30%, 40%, the more the better. So this panic basically tells people that trend is over, and but there's still a lot of bagholders. Now, when I say bagholders, I mean the people that bought the stock previously, a few days before that, and they usually buy it at the very top on a hype, and they're waiting for stock to go up. But this particular setup traps a lot of bagholders, people who hold the stock, right? So the idea here is that right after this red day, there will be bounces up, and on these bounces up, I want to short all these spikes, meaning that I want to bet on the stock to go down after the spike. So if you think about it, it's basically the psychology, so people who bought the stock earlier, they want to make money on the stock, and then it went against them by like 30-40%. They don't want to cover it, but then there's another group of people that after the drop, they want to buy a stock, meaning that they want to make some money on the bounce, right? And they're waiting for the stock to go higher than the previous high. So these people also get trapped. They cause these massive bounces, but these massive bounces after the drop, they basically invite all these bagholders to sell into the spikes. So at this point, people are basically covering up their losses, and they're causing the stock to go down even more. And I've been tracking it only for a week, statistics wise, but I've seen this pattern work after big runners like Kodak in August, like AMC, like GME. They basically work almost every single time. So let's go ahead and jump to my computer, and I'll show you what I mean. And I hope you guys can use this strategy with me. Okay, so let's look at the most recent runner. You have GME, GameStop. The stock went from $17 all the way up to almost 500. This is daily chart, this is intraday chart. So what you can see here, after this huge parabolic, there was the huge dump that took stock down from 350 all the way down to 243. And that was the 26th of January. So let's go back and look what happened. Okay, January 27th. So we know there was a big drop, and so this is the January 27th pre-market and regular hours. And so we actually can see that there's a spike after hours, but we don't care about after hours after that. So after this happened, we pretty much know that the stock has gone up a lot, like more than, so it went from like 17 to 400 at this point. We know that there's going to be correction, or probably it's going to start dropping just because of this first red candle on daily chart. And we know that there's a lot of bag holders from yesterday, right? And also the stock went up on pre-market, and after the first red day, if there's a spike, it's a good idea to counter all these people who did bought at market open. So that's why I would like to short this market, this morning spike, right? So right next morning, this is what happened. The stock opens at 262 and it goes to $480. I would wait for this red candle and I would short it here, knowing that there's a lot of bag holders from a week before, even from yesterday, that are gonna sell into this spike, because it's basic psychology. People want to cut even or minimize their losses, so that's why they would want to sell this stock. And the stock drops, and let's see what happens after that. Pretty much starts the downtrend, and there's no entry points at this time. And let's go forward. So we really want to find some spike right after the open. So here we go, another one. So stock opens at 54 and then it goes all the way up to 94, so basically doubles. First red candle, and you know there's a lot of bag holders who have been buying it the whole week, trying to dip buy it, following Reddit threads and stuff. And I want to short it right after this red candle, and then it pretty much drops. Okay, let's look at another stock. Let's look at AMC. Okay, so this is AMC. A lot of you guys remember this action also. The stock went from $2 all the way to 22, so the same big runner. And then we'll look at the 27th. It actually dropped the same time as GME. So the first red candle in the daily chart, so we saw a really big dump. So let's go ahead and see what happened. So let's go back. I'm gonna put it 5-minute chart. Let's go back to the 27th. It's gonna take a while. Okay, so here we go. So we know that here there was a pre-market spike. We don't care about pre-market spike. We know that 27th, this is when the stock dropped. So we know that we're gonna use this strategy from now on after this big drop. Basically, we're gonna counter all the spikes. So let's go see what happened. After hours, pretty much dropped. And next morning, this is what happened. So it opens at $12 and immediately you have this huge spike to $17. And then you wait for this red candle, and I would short it here. And always my risk is behind the local high. So if I short it here, I don't want to lose more than $3 on this spike. So if I shorted 14, I would get out at around $17. So again, shorted here, knowing that there's a lot of bag holders, and they would probably gonna sell into the spike, and the stock drops. And again, I want to track all these averages to know exactly how much it drops after the initial first drop on daily chart. So that's why I'm gonna track the stats and see what happens. Okay, let's see if there were any other opportunities. So that's another one. So you have a drop here. Again, you don't want to short it right from the open. That's kind of dumb because there's no one to counter. You really want to wait for the spike. Now this spike, it's called the midday spike. So it spikes at 12 o'clock. So like a midday spike. And you can theoretically short it, but it's not ideal because according to stats, these midday spikes are very unpredictable. They can pretty much keep going. So ideally I wouldn't touch it, but you can probably give it a shot and short it right here midday, and then it drops. Let's see if there are any other opportunities. So no opportunity here because it just dropped from the open. The same thing here, drop from the open. This is the same thing. This actually spiked closer towards the end of the day. So again, not ideal to short into because you really want to counter the most people, and most people are trading right from the market open, basically like a casino. They go longer short right from the market open. So you want to counter the open move. So yeah, an opportunity here, but this is the perfect opportunity. So it opens at right here, so 720. It has a little drop here, but then immediately it has a spike to $8. The first red candle, and this is where I would short, risking the local high, and all the back holders from all these days would sell into this spike to basically minimize their losses, and then the stock drops. So that's the strategy, guys. It's very simple, and let's just track statistics on this pattern. I think this pattern is pretty solid. I've started noticing this pattern probably in September, October, but I never really started tracking it because there were not enough of runners, and that's why I'm just starting it right now, because we have runners pretty much every single day. So yeah, hit the like button if you like this video, guys, and ask me anything in the comments. Thank you guys for watching, and see you guys next time.